Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, May the 30th. The year's 2019. Let's talk trading. Losing. We talked about losing yesterday, and I guess there was some interest, uh, I guess people never thought about it kind of the way I presented it. So, once again, losing. We got risk and money management. That's one of the legs. That if you don't have this leg taken care of, um, your three-legged stool's not going to stand. Now, the thing about the money management side, that's when you're winning. See, risk is when you're losing, or when you don't want to lose too much. On the money management side, you have to make sure your greed is in check, especially when you have the low volatility that we've been seeing. So, being happy with those 5 or 10 pip trades versus, those 20, 25, 50 baggers. So that's that leg. Then the method. You know, um, it's funny because of the FOMO, fear of missing out, or the SOS, the shiny object system. Traders constantly, you know, change their methods. Well, if you constantly change, how can you be consistent? So when you really understand that, trading is pretty much binary. It's going, price is going up or down. You're either making money or losing money. There's usually only two options. The one thing about trading is that, you wait, then you enter, then you wait, then you exit. So, I mean, there's three states there, the wait state being one of them. And that's where a lot of people have problems in the waiting. It's not necessarily the method, it's just the forcing it. It's the failure to wait for price to come to you as opposed you, chasing price. That's why I put horizontal lines on the screen. And some days, like on, one of my favorite trading screens, I say, hey, you know what? Nothing triggered. So I sat there all day. Did I click the mouse? No. Was I trading? Yes, because waiting is part of trading. Now, the final leg, the execution, the performance. I don't know if you what you like to study, but there's been a lot of information on habits, almost to the point of ad nauseum. But James Clear does a really good job, in my opinion, of researching habits and explaining them and showing people how it's habits that create the outcome. So in other words, I don't know if it was James Clear, but I was listening to a podcast or watching a video, and the guy said that, let's say you want to lose weight. Well, no, that's not, that's an outcome, that's a goal. What you need to do is you have to have good eating habits, because if you have good eating habits, the outcome is going to be, your body will have the proper weight. Now, how's that relate to trading? Well, you have to have good habits when it comes to trading. Do you have a pre-trading session routine where basically, your mind is clear, your area is clear, you're free from distraction, where you can totally focus and execute? Do you have your checklist, your pre-entry checklist? Or do you use an indicator? Do you follow it? I mean, on some of my screens, I literally have the rules of entry written out on the screen using that, the TRO My Notes indicator, the same one I'm using here to, display this, where you can just literally write whatever you want. You get 10 lines and you can make it big any color you want, but you write out exactly what you want to do. So in other words, if you have the good habits, in other words, think about it. You got your risk and money management. You make that a habit. Method. You make, you pick a method that shows that you have a chance to take profit. Your execution and performance, each part, it becomes a habit. What's going to be the outcome? It's not going to be losing, it's going to be winning. So that's what should happen. Now remember, these videos are for educational purposes only, and your results may differ from mine, and you should probably seek advice from a financial prevent or investment professional, right? Anyway, that being said, if you do these things and these things become a habit, then chances are you're going to put the probability of winning above the probability of losing. Now, any given trade, you might lose. Losing is part of trading, but the thing is, you don't have to lose overall. You can come out ahead. And, I know I probably have beaten this into the ground, but the risk management, you make sure your position size or stop loss is such that one trade is not going to devastate you or your account, because that's usually what happens. It's not usually, you're not going to get nickeled and dimed to death. You're going to get, $100 to death. So just remember that as you're trading. And you can see here the euro yen almost back up into the lower wick zone of the previous week. You see we bounced 51 pips off the low. And we're up for the day. Now, once again, these magenta dots, this is the previous day's midpoint. We opened above the midpoint, previous day's midpoint, went towards it and then took off to the upside. So we've got a green day right here. And, those previous midpoints, okay, just so you know, TRO mid dots. And in fact, there was a trader that had asked me something about alerts. Can price be alerted? Okay, I don't have alerts in this indicator. Maybe I'll put alerts in there. But I do believe on the dashboard, you can alert for midpoints. I'm pretty sure you can. I have to look that up. Okay, here's the first day of the week's range right here, this shaded area. You can see we're still below it. First day of the month, we're still below it. And we've only got today and tomorrow, so I don't know if we're going to make it here or if we're going to make it in there, but it's trading, so anything can happen. Still below the opening trading day for the past 12 months, and below those ranges as well. Inside bar here, you see, happened 3 days ago. And once again, on the daily, we're moving up. So hopefully if you took that inside bar trade, or it was it was a weekly wick zone trade right here, lower wick zone on the week, hopefully you were profitable. You took the profit. See, and as I mentioned when I was talking about losing and volatility, we got 31 pip range here on the euro yen, 44 on the dollar yen. This is just low volatility. Look, nothing over 100. So be happy taking those 5 to 10 pip trades. At least that's how I see it. Maybe you guys see it differently. I mean, in fact, here's a perfect example. You see it broke out of the upper wick zone here, the daily broke out of that upper wick zone for about 5 pips. Then it started coming back. So you probably should have scratched out around 3 pips. Nothing to write home about, but 10 times 3 is 30. So they add up. And you can see the euro yen is pulling off of the H1 highest open for the day right there. Good for about 13, 14 pips. Now, something to notice on these horizontal lines, this was the lowest daily open of the month. Sale price came, got close, and then bounced back. Just something to note. Speaking of which, This is interesting. Here's the pivot point right here. It was within the buy zone, so no bias. So you just take whatever happens. So right here you can see maybe this was a scratch trade. Then you got it again. You see it took out a missed pivot here and here again. So these buy zone trades here, we haven't even hit the sell zone. So as you can see, today was pretty much a long bias day based on price action. But here's the weekly open. So we're below that. Maybe we get back to it. We'll just have to wait and see. That's about 42 pips away. It could happen maybe tomorrow. 31 pip range, 30.8 to be exact. It's just no rat. Sorry, rats. We've got an open pivot from the day, but we closed yesterday's. So you can see here that pivot got taken out, but we added a missed pivot today. So we'll have to see what happens. But so far for the month of May, we've got 4 missed pivots. We've got twice as what we had all year. We only had 2. Now we've got 6 missed pivots. But we'll see if they get taken out. Price action. 1 ball at the bottom, pro trade green at the line, 3 ball at the top, normal trade at the line short, picking up about 10 pips at the moment. So once again, just trade price action, trading what you see. And we've already talked about the wick zone, in and out, in and out. Now we're back in. And my trading screen here, as you can see, you can just take the trades with the line. And it's just not giving up much, as you can see here, just a few pips. So maybe you only get 1 or 2 pips. Right here, as you can see, good for about 2 pips at the moment. Now, I think was there something I wanted to show you guys the other day? Oh yeah, this was the high and lows here from various time frames. Looking and see, once again, just trading price action at those lines. And this one here, remember my time bar, I like to use the high and low of the 1400 bar. And you can see here, there was a break to the bottom, small break to the top. Let's see, price open there, little break to the bottom, and price opened here, back in, price opened here, and then it came out of that. Actually, I'm thinking about something here. No, it's okay. Leave it as it is. And frequency distributions, once again, high to close, close to low, showing profitability of the rat zone. Range 31 for the day, 122 for the week. You can see nowhere near the ATR. It didn't even get near the halfway point. Just the anemic. High to open, open to low, seeing how you can trade off the daily open. Once again, frequency distribution of the range, where it looks like we're going to add to this level right there. Einstein line, once again, anemic. So, fellow traders, just remember that when you're trading, think about having habits and environment that's conducive to profit, because it's not what you trade, it's how you trade it. So, go out there and drain the banks.